But when the bond market puts in a rally and starts to go into an uptrend, that to me is a really good sign that we're probably going to see gold continue to move higher over time. I think gold was just a bit of a crowded trade, a wave of sellers hit, and it collapsed very quickly. But overall, if the bond market's going up, that means there's fears slowly creeping back into the market. Investors and traders are going to start to accumulate precious metals again. We haven't really had any big leading sectors muscling their way up and getting people excited. So we're kind of just stuck in this kind of doldrums. And when investors and traders get bored very quickly. They like action, right? And so when we get into this kind of dull type of market, they start to give up, they start to get worried, they start to overthink things, and they just start to move to defensive plays like bonds. So I think it's just kind of boredom, and it's making the delay and the move higher for stocks has got them just kind of thinking that maybe I should get a little more defensive. And so that's just kind of, I think, what's unfolding there. A lot of money was moving into the safe havens. We had been seeing utilities do well. And more importantly, we saw bonds really go from a big downtrend over the last year to putting in a bottoming formation. And now the bond market is actually in a new uptrend. And typically when we see the bond market, which I consider kind of the safe haven, but when the bond market puts in a rally and starts to go into an uptrend, that to me is a really good sign that we're probably going to see gold continue to move higher over time. I think gold was just a bit of a crowded trade, a wave of sellers hit, and it collapsed very quickly. But overall, if the bond market's going up, that means there's fears slowly creeping back into the market. Investors and traders are going to start to accumulate precious metals again. And so I am still bullish on gold. It's just kind of got delayed a little bit. But the bond market's telling us that people are going to continue to be buying gold because fear is slowly rising in this market. So gold's had this series over the last couple of years of a rally, a bull flag. We had the COVID kind of drop and pop, and then this next huge bull flag wave. Well, over the last few months, we've seen a very strong move in gold. And when we zoom into the price action, we had kind of the US dollar have this huge drop, and it broke down. It came right down to a really significant support zone. If we were to just kind of box in this type of price action, you can see it's a fairly significant level where we had a low here. We had more or less a spike low. We've had lots of price action trade through here. We had a big bull flag through here. So there's lots of volume in this blue box. And that's the first level where it's going to find support when it actually drops to. And so now we need to figure out if it's going to put in a bottom and start to rally and potentially trade sideways and build some launch pad before it goes much, much higher. But if the US dollar breaks down, we're actually going to see gold collapse very quickly and could go to around 1650 and break these lows, create a huge wave of panic. And when it breaks these lows, it's going to send it down to 1650 or so, cleanse the market, and then I think it would put in a very significant bottoming formation. And when you look at this drop in gold and it just refuses to bounce. There seems to be a lot of sellers still holding it down. When you look at this big chart pattern, this was a multi-month rally, and it's given back pretty much half of that rally from this recent move. This could take, multiple months to work itself out. Just looking at these oscillations, there's 1 month, maybe 2 months, it could take a long time. Like, this is a huge kind of a multi-year pattern, right? So nothing is really going to happen imminently. These big patterns mean that they take a long time to play out. And the fact that we just had a big kind of breakdown and a lot of damage to this chart, just for it to get up back to this level is going to take quite a few days for it to get up there. And then it's got to build some type of bullish pattern and then break out of that to really kind of confirm, hey, okay, now we're making some real higher highs and higher lows, but we could be more than 2 months for sure. It could definitely drag out. These patterns can take a long time to play out. Like, you look how many years it took for this last basing formation. And even this one up here, this was a very, very long pattern. And long story short is, if we were to look at this gold chart, this kind of rally that we saw back here in 2012, where we had this massive bull flag, it consolidated. This massive rally feels a lot like this type of scenario. And hopefully, I feel as though we're in the start of a new super cycle. So I don't think it's going to resolve to the downside. We may sell off a bit and continue to build a big base here, and it might take more than this year. It could drag out. But overall, we are kind of in this new super cycle for commodities, a weak currency, US dollar, And this should eventually resolve to the upside, and we should be like 26, 2,700 in gold. But you're right, this could drag out to the end of the year. The end of the year is not really that far away. 6 months is only a little bit here on this chart, and we would only be, at these blue lines. So yeah, it's going to drag out. The markets always move a lot slower than you anticipate. It drags things out. It'll bore you out. If it doesn't shake you out, it'll wear you out. You'll just give up on it. Be like, oh, this is like dead money. I got to go find something else. Everything else is popping and dropping, and here I am sitting here in a dead asset class, right? So that's what the market tries to do. It tries to either shake you out or it'll just wear you out, and you just move to where the opportunities are. When money all swings into kind of a couple key assets and the whole world's doing it, it's usually getting close to coming to an end, right? And that's when we should see commodities come on this upswing. And we've already seen gold do that. We've seen gold miners and silver starting to come to life, but we still have like 3 to 5 years of a potential major upward swing. But again, this is a huge cycle. These are big multi-year patterns, and they require time to actually unfold. So it's just a valuation standpoint. When everyone goes in one direction and everything's way overvalued, eventually it's going to come back. Elasticity will bring it back to the norm, probably go the opposite direction. Eventually stocks will be undervalued in real estate, and commodities will be overvalued. So it's just a constant, elasticity, overbought, oversold condition over a multi-year period. Silver has got the better of the chart patterns. It's had a very strong rally. It's been consolidating in this pattern with a series of higher lows and kind of sideways or lower highs. This is a very strong pattern. In fact, it's actually a very similar pattern that we saw back over here in 2009 and in 2010. After it had kind of gone through a bear market correction, we've gone through this whole bear market correction. It's pointing to a huge explosive move, which is why so many people are excited about silver, as am I. But it is at the lower end of its range when you look at this chart. So it still has a lot of work to do to get to that upper end and then eventually break out and start to move higher. But the chart is looking really, really good. When you look at it, zoom in on it, you can see here, each one of these vertical lines is a month. So we're still looking at several months for it to kind of probably work itself to the end of this apex. Eventually it's going to break one way or the other and go up. And that's why I like silver. It's got the cleaner of the chart patterns, which typically isn't the case. Usually silver is a pretty gnarly chart. It's all over the place. But I like silver a lot. And I think, not as much damage was done to the chart on silver, in my opinion, just because it continues to make the series of these higher lows. And as long as it doesn't break down and break below this, then it's definitely got a much stronger chart pattern. If it breaks this, which there is potential, if the dollar rallies, we're actually going to be going right down to $24 an ounce for silver very quickly. Hopefully it'll hold that level and then hopefully work itself back up and break to the upside. But if it breaks that level, then we're probably looking at an extended period for silver to kind of repair itself and change that momentum back to the upside.